Hi there. Thanks for stopping by the Equity Trust Virtual Classroom. My name is John Bowens, and in this segment, we're going to be talking about how to process real estate transactions using your self-directed IRA, self-directed Roth IRA, self-directed solo 401k, or other tax-advantaged investment account. Now, to aid us in this conversation, we're going to go through this hypothetical example where we buy a property for $90,000. We put $10,000 worth of rehab into the property. We're in it for $100,000 as an all cash buyer. We're renting it out for $1,200 on a monthly basis, which is $14,400 annually, with a net operating income of $10,000. Or in other words, we have $10,000 in cash flow flowing back into our self-directed IRA or retirement plan, all tax exempt. Now, it starts with a simple three-step process. So you want to write this down. Step number one is open and fund your self-directed IRA, solo 401k, Roth IRA, or other tax advantaged investment account that you'll be utilizing. Step number two is direct your investment. Direct your funds from Equity Trust as your custodian to the necessary entity that is completing the transaction, i.e. title company or closing attorney. Step number three is manage your investment. Now, let me go back to step number one for a moment before we jump into this transaction. Opening and funding your account is a very critical step in the process. I find one of the most common pitfalls among so many investors is they will fail to establish and fund their account well in advance. They find an opportunity and then they don't have enough time to open and fund their account. Because see, we're at the mercy of another financial institution to wire transfer the funds or roll over the funds by check into the Equity Trust self-directed IRA. So we can establish your account in a very short period of time, but you're then reliant on another financial company to send the money into your Equity Trust self-directed retirement plan. So really important that your account is set up and funded well in advance. All right, so let's walk through the transaction here so you can understand the logistics and mechanics of how this works with your self-directed retirement account. So the first step of any real estate transaction, of course, is due diligence, looking at the property, hiring an inspector, going through the process associated with examining the opportunity. You're going to enter into a purchase contract. When you enter into a purchase contract, what most investors are familiar with is entering into a contract with the buyer listed either as themselves personally, or the buyer listed as an LLC that they own and operate. When your IRA is buying properties, it's your IRA entity that is buying the property, and you are directing the IRA. You have full discretion over the use of this IRA account. The titling that you will use when you enter into a contract, buyer as Equity Trust Company Custodian, FBO, is in for benefit of your name or account number, IRA. If you're using your Roth IRA, you'll plug and play Roth IRA. By the way, if you're using a health savings account, you would use HSA, or a Coverdell education savings account, you'd use CESA account. And also note that if you have a solo 401k, there's a little bit different variation on the titling. You can reach out to Equity Trust directly when you're getting prepared for a purchase, and we can set you up with the appropriate titling for that individual investment. So you'll notice here with this titling that you can use your name or your account number. See, some folks, for anonymity purposes, prefer to use their account number. They don't want to have their name on public record. So in that case, you would list Equity Trust Company Custodian, FBOs and for benefit of, your Equity Trust account number, IRA or Roth IRA, depending on the type of account that you have formed with Equity Trust. So once you have your purchase contract, you likely then need an earnest money deposit. Not always. In some instances, you're just going to send the cash necessary to closing on the date of closing or just prior to. But if you need an earnest money deposit, let's say in this example, we need a $2,000 earnest money deposit, then our investor is going to log into their online My Equity account. And under the real estate navigation tab, the investor is going to key in the relevant property information and request a $2,000 earnest money deposit to be sent out to open escrow. Now, that earnest money deposit from your Equity Trust online My Equity portal can be sent via ACH direct deposit. We can mail a check, or we can send a wire transfer. The important thing to understand here is that it's your IRA that is writing the earnest money deposit. And this goes back to having your account open and funded in advance. See, if you personally, not from your IRA, but out of your own personal bank account, if you write an earnest money deposit, that can be considered a prohibited transaction. It could invalidate your IRA. So you want to make sure that the earnest money deposit is paid for from the retirement plan. So now that you have your earnest money deposit on the property, you are then going to enter closing. You're going to go back online through your My Equity portal. You're going to key in the relevant information. The wire transfer information, for example, that needs to be sent to the title company will be keyed in through that process, the property address, the name of the escrow agent, and the name of the title company that the money needs to be sent to that's closing on the deal. And then, of course, at that time, the supporting documents for the transaction. So with the settlement statement, you'll simply do a document upload into the Equity Trust My Equity portal. So we have the needed documentation, and then we will wire transfer the funds necessary directly to the title company. So you are giving the direction to Equity Trust via the online portal, and then Equity Trust is wire transferring the funds out accordingly. So cash leaves the account. In return for that cash is a deed to the property. And that's very important to understand, that when you buy real estate with a self-directed IRA, the cash is leaving the IRA. In return for that cash is a deed to the property. You're not borrowing against the IRA. You're not taking a distribution. You're not creating any type of taxable event or any type of penalty. You're simply acquiring the property. Very similar to buying a stock or mutual fund, which most people are familiar with. When you buy a stock with the IRA, cash leaves the account. In return for that cash is a stock certificate. It's the same process here when buying real estate. So now that we own the property, we have $10,000 in rehab costs. So as we have those costs that come up, those expenses that come up, taxes, insurance, payments to contractors, etc., those payments are going to come from our Equity Trust IRA. How do we process these payments? These payments are processed through the online My Equity portal. We have a bill pay system that allows you as an individual to prep the information necessary into the system, hit submit, and then Equity Trust will send the funds out via check, wire transfer, or ACH direct deposit. So cash is leaving the account to pay for all of our expenses, paid out to the necessary recipients. And then all of the rental income is going to flow back into the self-directed IRA. So the $1,200 on an annual basis is sent directly back into the Equity Trust IRA. Now, how do we do that? The tenant might make a check payable to the Equity Trust IRA and then mail it for deposit. Maybe you have the tenant make the check payable to the Equity Trust IRA, give it to you, and then you mail it to the Equity Trust IRA for deposit. We also here at Equity Trust have an online tenant payment center, which means you can send a link to your tenant. They go in through a portal, key in their bank information, and then the money gets zapped into your Equity Trust IRA via an ACH direct deposit. Also, if you have a property management company, you might have the property management company collecting the rents, paying for the ongoing expenses, and then the net proceeds will flow back into your Equity Trust IRA. Some self-directed IRA investors manage properties on their own, and some hire a property management company. One important aspect to take note of, and we talk about this in our rules and procedures videos, is with a self-directed IRA, this is a highly tax privileged account, and you have to be mindful of the rules. You shouldn't be doing any of the physical sweat equity. The rule of thumb that's used in the industry is do the desk work, but don't do the physical sweat equity on properties that you own in your IRA. So you want to make sure you are respectful of those rules. So as you can see here, you have money flowing out to the property, no taxes or penalties. Those are expenses related to the property, and then money flowing back into the Equity Trust IRA. And much of what you need to do from a oversight perspective can be done through your Equity Trust online My Equity portal. Now, last but not least, what if we were to sell this property? If we sell the property at closing, the title company is going to wire transfer the full amount to the Equity Trust IRA. There's no long-term capital gains tax. There's no depreciation recapture. because the IRA is a tax exempt entity. So as long as you're following all of the rules and all of the procedures, all of your profits are tax exempt. And that's when we start talking about what I like to refer to as compounding interest in the absence of taxation. The ability to generate profit in a tax exempt environment, which can have magnifying effects over long periods of time. So that's our training on buying individual properties with a self-directed IRA. I should also mention, when I talk about compounding interest in the absence of taxation, as you have cash flow flowing back into the IRA, so as long as you're following all the rules and all the procedures, there's no per se documentation on your individual annual tax return showing the gains into your IRA. It's just like owning stocks or mutual funds in your IRA. When you own stocks or mutual funds in your IRA, dividend income flows into your IRA. You're not required to report that particular income. It's not until you start taking personal distributions from the account or maybe converting from a traditional to a Roth that you have taxable situations. So we have additional training on that as well, but this was our procedures and processes around buying individual properties in a self-directed IRA. I hope you liked the video and the training. Join us for our additional video trainings, and you can like us on YouTube by subscribing, and you'll also get all of our additional videos and notifications of those as we release them on an ongoing basis. So until then, everyone, keep leveraging compounding interest in the absence of taxation.